Jersey is recognized.
At this time, I would like to yield to the gentleman from Wisconsin, the prime sponsor of this legislation, the gentleman who has been the driving force behind this idea. Mr. Duffy, as much time as he may consume.
The gentleman from Wisconsin is recognized.
Thank you, Mr. Speaker, and thank you, Mr. Chairman, for yielding time. As both you and the gentleman from Delaware mentioned, it's pretty remarkable that on financial services, where committee comes together and doesn't always agree on the particulars of every debate that we have, that this bill came out and we had a vote of 57 to 0 moving it forward. I think underscores the fact that there was a lot of work put in on the front end, making sure we were working out the kinks and the concerns. I'm very appreciative of Mr. Carney from Delaware and all the effort and help he put in, and from Mr. Garrett making sure that we could put a package together that we can get a lot of folks to buy into. We all realize that job creation, especially with a slower moving economy, is incredibly important. And job creation at the higher levels come from our small businesses, our emerging growth companies. And as Mr. Carney earlier referenced, that's why financial services came together and passed a bill out of the House, along with the Senate moving and the President signing the Jobs Act, that helped emerging growth companies actually get on the on-ramp and go public, accessing more and better capital. What we've seen, though, are a few concerns from those small emerging growth companies that are going public, that they're not as easily accessing capital as they thought they may. And that's why we've come together to go, how can we start a pilot program to see if we can enhance the interest and the capital and liquidity of these emerging growth companies. And it really is not very complicated, as Mr. Garrett indicated. This is a 5-year pilot program. So if things don't go as expected, the program will end. And if it goes as well as we think it may, we can continue this on permanently. And we're truly looking at small emerging growth companies, those that have revenue of less than $750 million a year. Again, the small, fast-growing companies. It's a small space of the market. It's only 2% of trading on and off exchanges. There's been a lot of debate as we've done this about, well, what's an appropriate model to use when we increase the tick size? Do we do a trade ad, a quote ad, midpoint matches? A lot of people came to us with a lot of different ideas. And we both realize, well, all of us realize this, there's a larger debate going on right now that involves our dark pools and our exchanges. To be very clear, no one here who worked on this legislation wants to impact, in this bill, that debate. The intent of this bill is not to influence that debate at all. It's really very specifically and narrowly tailored to help small businesses as they look for additional capital to grow and create more jobs. And that's why we've given the SEC the ability to set up different baskets or different segments. One can be trade at, one can have price improvement of a different variation, but allowing us to get good quality data that'll help us make decisions as we move forward. One other thing, companies that may not want to participate will have the option to opt out if they don't feel like this kind of a program would work for them. Anyway, I just want to say I very much appreciate the gentleman from Delaware and the chairman from New Jersey for all the effort they put into this bill, and I hope that our colleagues, after seeing the great support that we had in the committee, will support this bill today. I yield back.